With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Wednesday afternoon. I'm Juliette Sarley. Nice to have your company on a day when we are counting down, of course, to the impact and what's going to happen to markets. A lot of volatility expected as the White House did announce overnight that Donald Trump's sweeping tariffs will take immediate effect after they're announced later Wednesday. Look, we had a really positive start to the session. The CBO 200 there finishing fairly flat. No surprise, there is a bit of trepidation heading into this offshore session, so people have sold out of their positions. The ASX 200 rising by around 11 points or 0.1%. It's tracking at 7,936 points. Let's have a look in terms of some of the themes of the day, because of course Liberation Day is looming. Are we calling it L Day rather than D Day? A lot of, as I mentioned, volatility, and we'll get to that with our guest Kai Chen from MPC Markets, who's joining me today. In terms of what we saw with some of the sectoral moves though, certainly a big move in property. Today we did have building approvals coming in better than expected. A lot of REITs looking really good. This A-REIT sector up by something like 2% today. But weakness still and concerns about iron ore and iron ore demand, sending the materials space down by 1.5%. Energy stocks also under pressure, off by about 1.5%. So that really did offset some of those other gains we saw. And no surprise, some gains too in some of those defensive areas. The healthcare sector up 0.9% today. Let's have a look at some of those moves in the market. Having a look at these iron ore players that came under pressure. Fortescue off by 1.7%, $15.37. That was one of the stocks of the day on the call yesterday when I hosted, and my guests David Lane from Ord Minnett and Henry Jennings from Marcus Today both indicated that, you know, if you were a long-time believer, then you'd probably still hold Fortescue, but it certainly may not at any point soon get back to those levels that it was at, around $30. Having a look at the REITs, we talked on the property space, looking pretty good. Charter Hall was up 3.5%, Goodman Group up by 3.2%. And also having a look at some of the tech players today, that's some of the other REIT stocks. WiseTech Global, Sean Hickman from Market Matters has written a very good piece on WiseTech that you can read in our newsletter this afternoon. It was up 2%, NextDC up 3%, and Technology One up by 1%. Zip, though, a laggard, and don't forget that the NASDAQ overnight did see a gain of around 0.1%, rebounding though the volatile automaker Tesla rising about 3.5% ahead of its first quarter vehicle deliveries report due in the Wednesday session. Quick look at some of the corporate stories. Mineral Resources says it will strongly defend a class action proceeding filed in Victoria's Supreme Court against itself and MD Chris Ellison. Some announcements too in terms of the C-suite at Westpac. Vulcan Energy to bid for German fundings towards its Lionheart lithium project. Shares down 10% today. Star Entertainment, of course, has been in a halt, but it says it's failed to secure funding from Salter Brothers, which was required to provide the group with sufficient liquidity to refinance existing debt. And Biome, we just spoke to them, Biome, reporting revenue of $4.5 million in the third quarter, a 41% year-on-year rise. All right, let's get to our guest, and welcome to the COB, Kai Chen from MPC Markets. Good to see you, Kai.
Yes.
How do you do your job when we are amidst all of this uncertainty?
Oh, absolutely. Uncertainty is definitely the key word for today. I think that, as you saw with the market, it started off with a strong performance, but throughout the day it's kind of pulled back to being flat. And everyone's waiting for LJ tomorrow. So, you know, it's quite a blanket tariff sweep from Trump. So I think they're looking at probably about 20% or so tariff levels for most of his trading partners, whether it's, you know, across the globe. So I think it's going to be fairly significant. And it's a really interesting question in terms to see how this doesn't negatively impact the US economy. And I guess what everyone's looking at is the after effects. Does this force the Fed to basically cut rates? And I think, you know, obviously if we see the economy underperform and slow down, that is a very likely possibility.
Well, yeah, there's a lot of concern about whether or not we see a US recession, and Michelle Bullock, the RBA governor, was asked that yesterday at the press conference in terms of how they're positioning too. Just getting back, I guess, to my first question then, how do you position? And I know that Mark yesterday wrote a really interesting piece about maybe taking some guidance from Michelle Bullock and being calm amidst all this noise.
Yes, as with all markets, there's periods of uncertainty and volatility. For us, we've actually done fairly well with our gold stocks and gold positions in general. It's at all-time highs. Pretty close to all-time highs now. And silver as well. So the precious metals are doing really well, given all this uncertainty. Obviously the mining stocks have been fairly underperformant. But we've got good hedge strategies in terms of constructing a solid portfolio to ride this out. So it's certainly not easy, and there's definitely quite a bit of pain for the last couple of weeks. But yes, we're doing okay.
All right, let's talk about some of the stock specifics. And I mentioned Mineral Resources there, saying they're going to strongly defend this class action. Your thoughts on what we've been seeing here?
Yeah, obviously with what's been going on with the class action, Chris Ellison, I think, we've seen some of these founder-led companies really in the spotlights in the last couple of months. It's yet to be determined. I'm interested to see how this goes, but obviously there's a lot of things going on behind the scenes and revelations to come. It's certainly not good for Mineral Resources. Another
company, Star, whether or not this goes bust or not, it's not great that it hasn't managed to get this lifeline.
Yeah, they were really hoping to get the 750 million from Salt Brothers, but that's now off the tables. And they've also gone to the Queensland government saying, well, will you guys rescue us? But I think the answer is no. So, they're really in a tough spot at the moment. I don't really think there's any rescue deals to come. But at the same point, they are sitting on a lot of assets still. So I think, potentially someone could come in and really pick up, all these assets for a very, very discounted price. So it'll be interesting to see what develops, but I think as its current form, it is very uncertain for the side, and quite likely they will fail.
Yeah. Let's go back to the tariff implications, because it's going to be a wild night, you would expect, on Wall Street. We did yesterday on the call some of these Australian stocks that may either be positively or negatively impacted by tariffs, and we know the likes of ResMed's CEO, for example, has said that they should be okay. Treasury Wine Estate's another one. Just what's your view on some of these sort of tariff-related stocks?
Yeah, I think with Treasury Wine, they've got some they've got their US brand Dow, so they are half edged off. I think there is going to be a lot of focus in terms of our agriculture tariffs. So I think that's going to be the main point that Trump will be focusing on tomorrow. Just generally, I don't think tariffs are good for the economy. It is short term going to be inflationary, where based on if they increase the prices, people the price of goods will increase, but at the same time people will probably pull back in terms of spending. So it's definitely a deflation, a negative for the economic growth.
And for us at home too, is that going to then spark potentially moves from the RBA? They very much held firm yesterday.
I do think so. I think if really guided by the US to see how the flow-on effect comes through. Recently, in terms of economic figures, the US has actually been fairly strong in terms of their employment figures. So on Friday will be a fairly important indicator to see whether the employment numbers have dropped off. I do think there will be flow-on effects for our economy.
So does that mean you just stay in gold, or we know you've done well with gold?
Yeah, gold's definitely the safe bet. Everybody's looking at that. So I think it's going to continue its current trend. Silver as well, it hasn't really broken out of that resistance level yet. But those two come in pairs. So I do think those precious metals will do fairly well.
All right, and hold on for the ride, I guess. Kai, thank you. Kai Chen from MPC Markets with us. Getting back to stock specific, the stock of the day was Kelsian. Andrew Wallant from DP Wealth Advisory and Henry Jennings from Marcus Today joined our Andrew.
Yeah, it's not one that I had on my radar. It's still not really on my radar. I suspect the bounce will be short-lived and this will take some time. If you're already a Kelsian shareholder, sorry for your loss. But at the end of the day, I think this is just going to keep going a bit sideways until we get more information on this sale. I could get a really big price for it, who knows? But for the time being, debt is the issue, and the businesses are underperforming, I think.
And today's relief rally is probably more short covering more than anything, because the short interest that people betting that the share price is going to fall has actually been rising. So I suspect there's a little bit of short covering going on today. I've got no interest in this, Andrew. If you're lucky enough to be holding it, to Henry's point, I'm sorry, it's not a sell. Why would you crystallise a 51% loss over the last 12 months or 24% per annum loss over the last 3 years? But it's just going to go sideways for a bit. There's certainly money to be made in other places. This is not one of them.
All right, not mincing words there. No interest. All right, let's have a look at what interest investors did have with the market leaders today on our market. We're looking there at mineral resources, but there's some of the laggards. Liontown Resources coming under pressure. We talked about Treasury Wine Estates as well. As we look there to the implications, I guess, of whether or not some of these stocks are going to be hurt by the tariff implications. I will just quickly on my screen tell you what the leaders were on the ASX 200. Light and Wonder was up by more than 5%, Megaport up 5%, Goodman Group, NextDC and Charter Hall also had a good session. To the small end of town today, Frontier Digital was up by some impressive 14%. Ainsworth, 40 Medical, Polymetals also had a good session. On the laggards side in the small end of town, these stocks on your screen, including Energy Transition, which was down by around 12%. Well, L Day, whatever you want to call it, Liberation Day looming. We've also got factory orders for February, the US ADP employment numbers for March, and then tomorrow we're going to, of course, react to Donald Trump speaking on the tariffs. We've also got the RBA's financial stability review. Key one with the jobs vacancies for February and the goods trades balance also coming through for Feb. All right, let's have a quick look at what we're seeing in terms of the overall market momentum there. Pretty flat on the CBO 200. The ASX 200 has managed to close in positive territory, only just though 9 points, a tenth of 1%, 7,934 is where we sit. So certainly sold off into the close ahead of the offshore session and a lot of volatility expected. We will talk you through it all, including President Trump's speech and the market reaction from 9:45 a.m. Eastern tomorrow. We'll see you then.